to avoid race conditions, is there a minimum amount of time that someone should be thinking about to allocate between signals? There was an issue that came up where someone was sending multiple signals and then it ended up with an inconsistent trade. And I was just wondering if it's like if someone's sending something at the same or to avoid sending at the same time, are we talking about seconds, minutes that they should have between trade execution?
Yeah, I think we generally recommend in the like 10 to 15-second range, just to leave enough time for not only the signals to come through from TradingView, but us to wrap that up into an order with your broker for your broker to respond to that and for the trade to fully be expressed before you send the next signal. That said, there are circumstances that I think are really important to people where they need all their orders to kind of come in at the same time. And that is usually around the subject of take profit and stop loss orders. So we always recommend that you attach your take profit and stop loss order with your entry order so that all three get executed with the broker at the same time. And we can send orders that way to the broker in most cases, as long as that broker supports it. And when that happens, then it's already with the broker. It'll get executed quickly. You won't have much to worry about there. But if you're trying to send a buy and a sell and a buy and a sell and a buy and a sell, all within seconds of each other, there's a pretty high possibility that one of those might get out of order and you end up in the wrong direction in your trade. And that's not really recommended. So probably a 10 to 15 second buffer is like the absolute minimum. I tend to trade on much higher time frames, somewhere on the 1 or 2 hour chart at a minimum. I just think personally that the market, if all markets are fractal and all systems are tend to be fractal on multiple time frames, why spend all this money trading on the really small time frames like a 5-second chart? If that trade is going to show up on the larger time frames, you'll have less commissions that you pay on the 1 hour chart, and you'll be in the trade for longer, improving your odds of success. But that's just my opinion. People like to trade all kinds of stuff.
Have you had the difficulty of explaining to somebody, hey, you're trading the 1 minute, but your strategy is not specifically doesn't specifically require that. Like why you're doing? I find it very difficult to talk people out of who are in a 1 minute time frame out of that into a 1 hour time frame. They seem to think that they're losing opportunity, and to me, it's just like so much more risk on the shorter time frame. I just don't understand.
Yeah.
Um, have you ever been in that situation?
I mean, sure, I've been in it, but it was early in my career when I was thinking more from a, exciting, this trading's supposed to be this like,
Right.
gambling kind of environment. And I think the emotionality of it is what I was attracted to. You want that quick win. You want something that, I want to get in a trade and make $5,000 in 15 seconds, and be able to tell my friends that I made that kind of money.
Right.
When you get realistic about your goals over time, because that's an extremely difficult thing to do successfully and consistently, you start to realize that being able to measure the market at higher time frames and slow down your expectations and maybe level set your expectations um, puts you in a point where what you're really trying to do is capture what the market is really saying. And it's sort of like the signal on the smaller time frames is just a whole lot of noise. There's just a lot going on. The candles are all over the place. You can't really tell what the story is on the chart when you're zoomed in that closely. But the further you zoom out, the clearer the story becomes, and that has helped me stay in trades longer.
If it wasn't for my understanding of options, I think I would still be stuck in the intraday time frame because you'll look at the volatility from like close to close, and it's like low volatility, but the intraday volatility could be insane. You're like, what is going on? Well, then
Hmm.
it turns out the dealers are moving the prices around in order to get the options to expire where they need to expire. And so when I got to that, once I understood that, then I was like, oh, okay, well, now I'm being ridiculous. But the I guess I could understand it because if I'm playing chess, I want I play the like 1 minute, 3 minute chess games as opposed to one move a day, 3 days, 7 days, because like you said, it's not exciting. But now that I see the excitement in second guessing my the move I made 2 days ago, I'm still getting the emotions that I need without having to pay for each trade. All right, perfect.
I think maybe one other point to add to this too. There's a really, really good book by Annie Duke, who was a professional poker player for a very long time. She wrote this book called Thinking in Bets.
Yeah,
And another like big insight that I gathered from that book was this concept of being able to tell the difference between skill and luck. And particularly in markets, it's extremely difficult to tell whether or not your trade was due to luck or due to skill. I think, in my working theory, particularly with the way that I trade and some of the longer time frames, is that if I were zoomed in really close on the charts, the amount of volatility that exists there, and especially if my stops are really tight. We spoke to a customer the other day that wanted to trade one tick at a time, and it's like that's not going to work. First off, you're gonna spend all your money on commissions with every tick, but also you're so tight that every price swing is going to get you potentially in the wrong direction. Right? There's just so much chaos when you're zoomed in that closely that if you were to catch exactly the right trade, was that skill or was that luck? That was
right.
probably luck that you just caught the perfect run that you weren't expecting. But on the higher time frames, if you've done your analysis and consistently over time you've developed a signal for when to express a long trade or a short trade, and you've captured that trend, um, there's a higher possibility that that's skill, and I think that skill starts to show up in the consistency of your P&L over time. So, you need a long period of time. You won 3, 5 years before you can truly say, like, oh, yeah, this is definitely the skill that I brought to the market rather than it just being luck. I still wonder if, like, traders out there that have made, $1 million in a short period of time because they took on some massive options contract, uh, you might look at them as a genius, but you really have to wonder, did they just get really lucky? And
Hmm.
now that luck appears as expertise. So that's another question to ask.
Actually, I didn't get a chance to mention to you. I don't know if you're using the simple trend lines tool that we just recently released on TradersPost.
Yeah, I played around with it.
I have been loving it. It has helped me get out of so many bad decisions. I'd be like, "Why is the price moving in this location?" And then I'll have that on and be like, "Okay, it's happening exactly here." I've been highly impressed with. I mean, not to pat myself on the back a little bit, but I've been highly impressed with that, and I'm in the process of doing a 2.0 version of that,
Hmm.
just because I'm okay. There's some quality of life things I want for that, but it's fantastic. Along the lines with the confluence of alerts. I've been going back over the support tickets that we've had, and especially in Discord when people talk about it, and I'm realizing, okay, this is a huge shortcoming in all these different platforms, not being able to easily pair different conditions together. And it along those lines of, is it skill or is it luck? Once you're able to have these tools that actually allow you to test your idea, and you can actually see the move happen exactly where you would expect it to be, then
Hmm.
I know, okay, it's skill. Like, I actually did see that, and I did predict it, and I did have a level of which I thought it would go to, that's repeatable.
Yeah. Yeah. And I think that's why we recommend really long, robust back test, rigorously testing your approach, doing walk forward, because again, we're trying to determine whether or not this is just luck that your strategy worked for a week, the month that you tried it, and you're like, this is it. I've got the holy grail here. Well, let's keep trying it because it could still be luck.